Hey everybody, welcome. This is Oscar, and today I got another bomb video for all my retirement and investor aficionados who like to diversify their portfolio. I'm gonna teach you how to find the best mutual funds for your Roth IRA, whether it's retirement, 401k, you name it. Fidelity offers a pretty cool tool to find good mutual funds, and I'm gonna teach you how to use it. It's pretty cool, not as hard to use, and I'm gonna tell you all the things because you wanna get some ratios, you want to find some key characteristics of each mutual fund to find the best return possible. So I got you on that one, guys. As always, if you enjoy the content, make sure you like the video and consider subscribing. That really helps a lot. Become part of the family. And in the links down below, you got your free stocks on Webull and Robinhood, and also free Bitcoin money on Gemini. Get those $10, all right? Guys, let's go ahead and start. It's pretty cool. So you are on fidelity.com, really easy to use. You don't need to be a customer of Fidelity, so that's pretty neat. What you're going to do is gonna go to the search bar and type mutual fund research. All right, it's a pretty cool tool to use, so you get a little bit experience with mutual funds. Then on that, you're gonna go to researching funds with the mutual fund library. So go ahead and click here. Once you're here, scroll down, click on find a fund. There you go. So now we're here, mutual fund research. Here's the place where you're gonna really go wild and crazy. Let's go ahead and start. Quick criteria. You have this where you can really get nitty gritty with the details. You have fund strategies. You really don't want to mess around too much with the all the components. Well, go ahead and click, and you have all these different sectors for you, whether it's zero investment, Fidelity Zero, because sometimes people ask me here on the channel, what is the best zero expense ratio index fund? Well, it really depends on your goals. Like, I'm not the same as you. You may are gonna retire in 10 years or 5 years, or in my case, hopefully 30 years. I mean, we have different objectives and characteristics to follow, but it's totally fine. Now, we're gonna be taking a look more on the quick criteria because it's where you have more ability to just toggle around with the different styles and options. So, fund type, I like this one. So you're gonna click here on fund type by class. You have all these classes, so take a look at this. You have all asset classes, you have allocation, and it tells you go ahead and check it out. It tells you the risk, which is low risk or high risk. You really select what you want. We have something about sector equity, municipal bond. We have international equity. So you see some of them have higher and lower risk. So it really depends up to you. For example, you're about to retire, you might want to pull your money from NASDAQ, QQQ, SPY, and put it into a money market account where your risk is going to be minimum because you already accumulated all that money. Or bonds. I mean, bonds are one of the safest as well. Once you decided what kind of class, in my case, I'm just going to select all asset classes. You can now move to this side. Note, you can also choose by risk. So you are like, I want to be extremely risky. I'm super young. I'm not in any rush to retire. Well, go ahead and select that. You are looking at the number right here, so it's already changing. If I lower the risk, you have either less funds or more funds. It really depends. So for this example, I'm going to go to the risk that's at the medium level, and then all asset classes. Now, moving on to the key criteria. What do I want to get from here? Well, I don't really want to only Fidelity funds. I want to explore more. You can, of course, play around with this and see what fits for you, but I'm going to see what fits for me, and we'll see what we find. It's going to be fun. Now, Fidelity funds only, funds picks from Fidelity. What I really want is no transaction fee. I don't want to pay for transactions on those mutual funds, right? I know there's going to be a fee, like always with mutual funds. And I'm gonna click quick parentheses here, an open bracket. If you don't know what mutual funds are, very easy. It's a fund, it's a pool of securities that an active manager manages on your behalf. So the money you're putting in on Fidelity, a professional person who is responsible for that specific fund is managing that portfolio, buying and selling different holdings and making sure that that specific mutual fund beats a specific benchmark, right? In order for that person to get a commission or so, that's the reason why mutual funds have fees. Some of them have greater fees because they are telling you that they're gonna give you greater returns, and the ones that have less fees could be the opposite. But it really doesn't work that way all the time. But that's the idea of a mutual fund. Back to this. So you want to do no transaction fee. In my case, that's what I want to do. Minimum investment. I also like it to be zero, because typically, and I'm going to show you one. There are some funds that ask you for $5,000 minimum, and that's wild, right? Most of us don't have that, but if you do, I mean, those are type of more, I will say, in my opinion, a little bit more expert type of mutual funds, where you are not looking at specific companies, but more at the economic changes that are happening in the country. So it does take a little bit more effort to understand those. So we'll go ahead and select the no transaction fee. Management approach, I'm not gonna mess with that one, don't worry. And here's the good stuff: morning ratings. So Morningstar ratings, this is how, like, the ranking of Fidelity. It's pretty cool. So overall rating, what are we looking at, guys? Do you want a low star fund? You want the high star fund? In my case, I think 4 and 5s are really good. Sometimes you see 4.5. Right here, you cannot select that, but we'll go ahead and select 5 overall rating, because we only want the best, of course. Once I select 5 stars, you're asking, like, you have to pay fees on most of them. Not all of them, but most of them. Now, returns, how much you want to make? You want to make lower returns and higher, I mean, that's up to you. Average returns or the highest returns possible. So I think in my case, I'm very easy to say that I wanna get some of the highest returns possible. I know that 4 to 5 is the key one, because not all 5s are really the best in terms of expenses. Now, but for this example, let's go ahead and select 5. Now, expenses, this is the expense ratio, and we'll go ahead and dive in a little bit more on that one. But just for the purpose of this example, let's go ahead and select an average. Once we do that, we'll go ahead and click on view results. So now here it is. You now have a sorted list of different mutual funds from Fidelity. More than 1,000 mutual funds already selected and filtered to 105 mutual funds, which is pretty cool. The ones that you see on top are here, but Fidelity selects the ones that they favor the most. So in this case, they're telling you the Fidelity Blue Chip, the Fidelity Emerging Asia, and the Fidelity Selected Medical Technology. So these 3 mutual funds are found somewhere here, but it's just what Fidelity likes to post, because it's from Fidelity and that's how they make money. Now, one of the things that you want to do is, because this is a mutual fund, people were asking me sometimes in my previous videos if they will want to buy a mutual fund when it's at a dip, so then they get more money when it comes up. Absolutely. But remember, if you're not gonna retire in the next 10 years, 5 years or so, really doesn't really matter too much when are you buying the mutual fund, unless you are investing more than $100,000 or $10,000, $15,000, $50,000, like a huge amount, then the margin matters most. If you're like me, who is only putting $6,000 on the Roth IRA, you're not gonna see that much of a difference, believe me. So unless, back again with some beautiful scenarios, we're looking at another market crash, the one in mid to early 2020 for the pandemic. When you see that, of course, maybe if you're seeing it, that's happening, save your money. Once you see that the market is coming back, go ahead and buy, and then you will see greater returns. But other than that, the corrections we've been having and the market dropping, those are natural. All right, all this good knowledge for you guys. So looking at this, what I like to see is not the daily, because daily, these are not stocks, these are mutual funds. So stocks, so go ahead and check out the daily, but mutual funds, not really as important because they change all the times. The 1 year, it's nice, but let me tell you something. 1 year for mutual funds, I wouldn't really check it because last year it was 2020, the year, right, that nobody wants to remember, and it was a different year for mutual funds, for technology companies. So for example, I know the blue chip growth fund has more than 50% of technology companies inside of it. So I mean, this 1 year is not gonna be the same for the third, for the fifth, and for the 10th year. Let me just show you. Oh, my bad. So 44%, but look at the holdings like Amazon, Apple, Microsoft. So they had its run 2020, not anymore right now. So I will check the 3 year, because you see the difference here from the 1 year to the 3 year. It's more than 50%. So that's not really sustainable, right? So 3 year to 5 year, or if you want to be as accurate as possible, go ahead and do the life of the fund. So click on the, I mean, that's the ratio you want to be looking at. The higher, the better, period. Now, when you got your fund, for example, let's go ahead and do life of fund. We'll click here, and the highest life of fund that Fidelity recommends is the FSMEX, the Select Medical Technology and Devices. Remember, these are the ones that Fidelity chooses because are from Fidelity. They want to make money. All matching funds are here. So the one that has the higher life of fund is this one, DESMX. Now, why we don't really hear too much from this? Here's the reason why. Typically, they have higher fees, which you see here, or a high barrier of entry. So on this one, this is what I'm telling you guys. This is what I'm telling you. $10,000 to invest, to minimum to invest. You see that? That is why you don't see them that often. And the holdings are companies that sometimes we know, sometimes they're not even close to. So it's so incredible to mess around with with this tool that allows you to find what really works for you. If you are a millionaire, you might want to consider that one. For us that we're learning as beginners, I think the FSMEX or the FNCMX, my favorite with NASDAQ, works really fine. So, and you go and really go down and find what works for you. If you are into the real estate, maybe, well, there are so many real estate funds. I'm gonna show you where. So if you go ahead and clear all the criteria and do fund strategies, and you do show, you're gonna see right here is real estate. I think I saw it somewhere there, but it's somewhere here that it's real estate. For some reason I can't find it, but at the end of the day, you have the real estate place where you can find it. But that is the way this works. Now let's go back right here to the mutual fund research and do something more normal that most people would do, right? So we'll do to by class category, we'll do no transaction fee, overall rating, we want the highest, returns, we want above average. If you want high returns only, that's fine, but above average is gonna give you really good returns, and the expense ratio you wanna do low. That's when you're gonna find the most. If I do even higher returns, I have 14. If I do average returns, I have 22. If I have increased one more return, I still have 22, so that's great. You add one more expense, you have more, but we wanna pay the least amount, even zero if possible. So, your results. And here it is. Which one is the first one, guys? You're taking a look at it. It's my dear FNCMX, Fidelity NASDAQ Composite Index, the one I favor the most. That's really good. Tracks the NASDAQ. Of course, there's so many different more that beat it completely, but I'm not really rushing, and I like the index. I'm getting used to knowing what NASDAQ is about. Okay, so the life of the fund is more than 10%. I like that. Overall, great, and it's 0.3 ratio net. That's the expense ratio, which means every $1,000 I have, it's 3% of that, period. Every $10,000, 3%. It comes up, it comes down, either $30 or $300, up to you. Some of them are at 1%, which means that if you put $1,000, I mean, yes, you are, you know how much that will be. So 10,000 at $10. All right. Oh, math is flowing right here. So you have the Fidelity Extended Market Index Fund and the Sustainability Index Fund. So that's pretty cool. I mean, I like it. I mean, you do have all these options to play around, maybe find something that gives you the most. For example, if you want to see a difference between this one and this one, it's the years. The Fidelity US Sustainability Index Fund, they've been open for less than 5 years, so you don't see the trend for 5 to 10 years, right? In case of FNCMX, they've been open for more than 10 years, so I like that. There's more validation, but I mean, that doesn't mean that it's gonna be the best fund out there, right? Alrighty, so and if you go ahead and do the expense ratio, so let's see the one that is asking for the greater expense ratio, it doesn't mean that it's gonna give you the greatest return, right? But it's just different things that may work for you or for somebody else. But let's go ahead and for our last example, let's go ahead and get crazy here. So let me just show you one thing that's pretty insane that I was finding last night. The overall rating, we want high expenses, we want the highest expenses, and then we want the highest returns. So look at this, 231 matching fund. That's pretty cool, because if I do the lowest, I get 14. If I go the highest, I get 231. So we'll go ahead and analyze it. Fidelity is telling me these are the three that give you the most and ask you the most on fees, and it's the blue chip growth, the emerging Asia, and this one, which they're doing really well. Just look at the life of the fund, the 1 year, the daily. It's pretty neat. But now let's go ahead and do expense ratio greater, and this is an obscene thing, like 3.66 net expense ratio per year annual. So that's something else. If you go ahead and open this fund, you will see that the minimum to invest is $5,000. See that? So that is why you don't have a Fidelity logo or the medal right here, because these are not from Fidelity. These are, other I will say mutual funds that you can always look at, because you don't need to be a customer on the Fidelity platform to use this tool, which is amazing. And that's what it is, guys. You want to find the right fund for you. You can select by class, by risk. It's all here for you, and there's nothing that is really that difficult. You always can go back and really understand how things work. Now, because I'm very interested to get the best fund possible, what I'm gonna do is to try to find something that works for me. So I'm gonna do by class category. I'll do Fidelity funds only, because if they're Fidelity funds, it's I will say, if you want to stick with Fidelity as your broker, they help you out a lot. They understand the fund. You have more management support if they're from Fidelity. So I want Fidelity funds. I want Fidelity picked. So everything Fidelity. So if I have a problem, they will fix it for me. Minimum investment. I'm not gonna click anything there, and I'll do high rating, highest return, and the low expenses. So you see that? I see. I want only Fidelity. I don't want transaction fee. I want the greatest returns. I want the lowest expenses, and I want the greatest rating. And I only have three. You see, from more than 100 to 3. So these are some of the best mutual funds that there are on the platform. Let's see. Fidelity Balanced Fund. First time I hear this. Fidelity Puritan Fund and Fidelity Midcap Enhanced Index Fund. First time in my life I hear these three, but I'm just finding them with you guys. So thank you for accompanying me in this journey. So we have the expense ratios at less than 0.6, so that's great. The 1 year is this, the 3 year is this, and the life of the fund is this. So if I was to pick my next mutual fund, I'll probably do this one. There's allocation 50% to 70% equity. I'm a little bit foreign to that, so I'll check Fidelity Midcap Enhanced Index Fund. That's an index fund. We'll go ahead and check the top holdings, and I see all of these. Cummins, I know this company. Zillow, I know this company. Lululemon, look at that. So these are companies that it seems that they are, spread out in different industries, and minimum to invest is 0. Expense ratio is higher than NASDAQ. The price of the fund is less than $20, and it's giving best returns over rating, and the expenses are low. You see that? So here is where you're gonna find funds that you never heard before, and possibly will make your portfolio on your Roth IRA or your 401k the best profitable in 2021. You guys, thank you for watching. If you enjoyed the content, make sure you like and subscribe, and I'll see you next time. Peace.